Dan's a fantastic man. He really is.
Ladies and gentlemen, please welcome.
Ladies and gentlemen, this is Dan French. It's the French Workbench podcast here on a Tuesday. Hopefully everybody out there has had a great day today. Thank you guys. If you're already tuning in, if you guys like the information, if you really like the content, please hit that like button. Also, subscribe to this channel. We're trying to bring the content. You guys are the ones really making this channel work. This is the behind-the-scenes information. This is the most real and behind-the-scenes information regarding financing, real estate, money talk, entrepreneurs here in Las Vegas through on-job experience. And we're streaming live from Las Vegas.
There ain't no school for our knowledge.
That's right.
First off, how did you get started? You said you got started. Explain to everybody how you got started and how long you've been doing this.
So I've been doing this about 5 years. My cousin started the business eCredit Advisor about 20 years ago. My background's in finance, and business. I'm actually Canadian. I moved down here about 5 years ago.
Oh, okay.
All right.
Nice.
All right.
So joined the family business,
Hey,
right?
all right.
Yeah.
Heard
And
that a million times. Sorry.
right. And yeah, no, we so obviously with the economic collapse and everything like that happened, tons of people had terrible credit stuff going on there with the credit afterwards. And so it was just kind of a natural fit with us. And our business evolved to be able to fit that market and help people. And now we're working with builders all over the country. We work coast to
Really?
coast. Yeah. And
So you guys are national.
yeah, we're national. Yeah. So we don't
Good
just
for you
work in the
guys.
Vegas market.
Okay.
We work all over the place.
Okay.
Yeah.
So is there like a general website that anyone in the country can go? I mean, so you could be in New England or Boston or,
Yeah.
Delaware. I don't know why I'm saying Delaware.
Exactly.
That's kind of random.
You
Rhode
wouldn't-
Island, man. So let's talk about if someone wanted to call you from Rhode Island.
What the hell? Go ahead.
That's something obviously you guys can service and help out. It doesn't matter where they're at.
Yeah, 100%. Honestly, probably 95% of our business comes from referral source. So
Okay.
typically it's going to be a realtor or lender or builder that's going to
See,
be
that's what happens
sending
when you
us.
do a good job.
Yeah.
And that's the testimony to how good a job you do, because if 95% of your business is...
100%.
Yep.
Yeah.
So I get a lot of people that come in and they run a credit simulator. Okay, that's like the first start for credit. Everybody runs a credit report, and there's got to be a direction for people, right? Somebody's got to say, well, are these people legit? Are the people in credit services, do they really impact and merely help the situation? And there's kind of some mixed reviews about that.
Totally. And honestly, the credit industry doesn't have a good reputation because there is a lot of fly-by-night companies.
Yeah.
There's not a lot of barriers to entry. You can pretty much look up online how to start a credit
Well,
repair
that's why the
business, but-
fact that 95% of your business
Yeah.
are referrals.
Yeah.
Because it can be a shady business, just like real estate and lending can be a shady business.
For sure.
But if 95% of your businesses repeat,
Yeah. And without naming names, there's some big companies that are like that too.
Yeah.
That have a reputation, right? That are good at marketing and not good at credit repair. I won't name names, but there is some big ones.
yeah,
Right?
yeah.
So what do you, Ian, what do you, as far as a credit repair company, right? A lot of companies come out and they say, well, especially lending companies, we can give you the credit, the simulator, support you, but we're not really a credit services. We know what's probably kind of affecting it, but we're not really in tune with like the details.
Yeah.
So a lot of these companies, they don't really help in the way that they say they're going to help. Are you guys, like, as far as being legit, I mean, you guys give the right information, or do you guys, because a lot of these companies, they just milk the process.
Of course.
Right.
Yeah. So our process, and again, we're niched within the mortgage industry. The whole point of what our program and the company is set up to do is to help people get financing for a home loan. And so our program is objective based. So you being the lender would say, hey, I'm working with John and Maria Smith.
Right.
We need to get them to a 640 credit score. They're at a 580 and 575 right now. I'm running it through my simulator and nothing is happening. I can't figure out how to do this. Can you take a look at this and give me some ideas? And a lot of the time, we do offer just free advice on a file. And so I'd go back to the lender and say, hey, if the client does what's called a pay for deletion, where if they try to get a collection account removed by simply paying it and getting an agreement from that creditor, that's going to get their score up to a point where they can move
so
forward
with that
and
being
qualify,
said,
right?
with that advice,
Yeah.
is that just from knowledge you've learned over
Yeah.
the year, or is there like a simulator that you have too that
No,
only you have just knowledge over the years?
it's
I'm just-
the
on
computer,
top of
yeah.
a simulator.
well, I mean, I didn't know.
That's
I mean,
like-
A
that's
trigger of
Listen.
a trigger.
Yeah, no, that's
you know what I mean?
experience for sure.
Okay, so you can hear a scenario, kind of look at the general overall credit, and you know exactly what
Yeah.
needs to go down just because you've done it so much.
Yeah, for sure. And honestly, I mean, there's so much information out there about credit that you can Google it just as a regular everyday consumer, right? Google credit and think you know what you're doing. And
Yeah.
we have there's a saying in our industry that goes, "What makes common sense doesn't make credit sense." And and it's true.
Right?
It holds
No,
true.
that's 100% true.
Yeah. And so, common sense says, hey, if I get a new collection account or if I have a collection account or a bunch of them on my credit report, simply paying those is going to help my credit score. And a lot of the time that isn't what happens and
Yeah.
actually hurts your credit score. And of course, people are left, over afterwards being like, well, why? What happened? Right. And that's typically when they get sent over to us and we look at their file and like, oh, yeah, you shouldn't have done that. And here's the reason why. Right. And we'll go in depth with them.
So it's not so much a million questions of why the system's like that. It's just, the system's like that and how it's set up. And hey, man, if you could change the world, you'd change the world. But given what it is, this is what you need to do.
Yeah. Same thing. Why is there over 50 different FICO scores, right?
Yeah.
Like, what's the point of that?
There is?
Oh, yeah.
There you go, man.
Yeah.
What's the highest credit score rating you've ever seen?
So by nature of what we do, we don't typically see high credit. It's true. I think,
But what's the highest
someone's
score?
got 850.
I'm gonna tell you, I haven't seen
5.8.
anything above a 850. Have
Oh,
you
I
ever
thought
seen
I-
anything
thought it was
above that?
5.8.
so with the mortgage scores, and I'll talk specifically to those because that's the industry we're in, they only go up to 850. And so you're not going to see above an 850 for a mortgage lending score. I think the auto loan scores, I think those go up to 900 or 950. We don't do a lot of business in the auto loan space because it's just not the same sort of, engagement from the customer to be able to purchase a vehicle as it would be, a life purchase like a home,
Yes.
right? So it's a different thing. Now I've seen scores as low as in the 300s.
They really have a 300.
And-
Wow.
And
Oh,
it takes effort to get there.
So-
It's kind of
so
impressive when that happens.
What's probably the most common thing that is what you would consider maybe a quick fix without being a quick fix that someone that like you repeatedly see come in, you're like, listen, this is
Medical.
a common thing. What would that be?
Well, so there's a bunch. I could tell you probably the most common, and this is for sure, most common types of collections that people have are medical collections, right?
Okay.
I knew it.
And we
I had
leverage.
one for $40.
I knew
really
it.
did.
No.
Only
Okay.
somebody,
Yeah.
and she's shaking her head because she knew she got
$40.
caught. Go
Yeah.
ahead.
No, so
I don't even know why I had it. I'm serious. I'm so irritated.
that happens to a
I
lot
now
of
have
people,
I
though.
have
Then
an
all of a
800
sudden,
cycle
that
score.
equals like an
I'm like, what is
aspirin.
this?
You know what's crazy? So that does impact your score quite a bit too. Like if you've got a really good credit score, it actually has a huge impact, right? What is the point deduction for that?
So it's going to be relative to the file, right? Because it's going to be weighed against everything else that's on the credit report. So if you have a bunch of really like a lot of open credit, revolving accounts, mortgage, auto loan, you've paid those down, and then you get a brand new collection account, that's not going to impact you as much as somebody, let's say, that has one open installment loan, their auto loan, then all of a sudden they get a collection, it's going to drop their credit score, right?
Gotcha.
And the better your credit score is, that one new negative account is going to affect you way more than somebody who's already got pretty bad credit. They get one more negative account. What's the difference,
Can you really delete an account? As far as I've seen, people were like, "Oh, we're going to delete." In the past, we used to have a lot of short sales.
Yeah.
Delete that, right? That's going to be deleted. Or can you delete like a foreclosure, stuff like that, if you pay enough money? Can that actually happen?
Yeah, so that's a loaded question, and it's going to depend on what type of account it is. And number one,
I won't say.
literally against the law for any credit repair company to guarantee you could delete an account. So what happens is when we look at accounts, and I'll use public student loans for example, because that's typically something a lot of people see. There's no credit repair company that can go after and challenge successfully a public student loan and try to win against Department of Education and Navient unless they have specified, documented, written stuff from that creditor that says, hey, this is incorrect. Here you go. We can leverage that with the credit bureaus. But if they don't have that, those accounts are not going to get corrected, right? Things like a bankruptcy, you asked me that earlier, right? Chapter 7, Chapter 10, those are going to stay on your credit report. Now, we won't even challenge them. We'll look at those and say, hey, no, there's no way we're going to go after them. Now, I've heard of other companies that will go try to challenge it. It gets removed, and then it comes right back on the credit report again. That's going to happen.
So it gets removed and they get paid, and then it comes right back
I've
on.
had that happen.
That is
It
not
got
right.
It got removed, so I can get the loan, and then pop back on. But I already had the loan.
So how do they figure that part of it out? Where if how do they manipulate the credit report where it's deleted for
I
a
know
period
that
of time,
system works.
and then all of a sudden it comes back to something?
Yeah, they get They get lucky. Something like that. Like, again, we won't even touch something like, because the odds are stacked against you. That's a rare case, right? Yeah. So us challenging that most of the time, that's just not going to happen, period, right? And so, when we're looking at a file, the way that we're going to analyze that, and this is something that most people don't know, this is not common knowledge. The most important thing on your credit report is what's called a date of last activity. It's called a DLA.
Okay.
And all that translates to in plain English is the more recent something is on the credit report, the more relevant it is to your credit score. So if you have, and this is where people get mixed up all the time, right? Again, common sense. I have these collection accounts. I know they're legitimately my accounts. Mm-hmm. I'm going to start paying on them and they're going to help my credit score. So if you have a client, let's say, that takes their medical collection that's 5 years old, and let's say it's $500, they go and they pay that account without a deletion agreement. What's going to happen is that account will update on their credit report, and it'll show that it's a paid or settled collection account, $0 balance, but instead of it being 5 years old, it's brand new again, and it drops their credit score with a $0 balance. And that happens all the time.
Oh, wow.
And so, the worst case scenario is somebody comes to us right after they've done something like that, where, in their mind, they think, hey, like, I've done something really, really good here. I've paid all my collection accounts. It's going to be a breeze now. That's completely the opposite.
So your advice is just let you guys handle that.
Yeah, some accounts it's going to make sense to settle.
And you know which ones it makes sense with and which ones to apply it to. Yeah.
If you're an average person out there
Makes
looking
sense.
to get some type of credit services, how can you go from the difference of, or knowing the difference between what you just said, and saying, okay, this needs to be done and this doesn't need to be done? Because what are some of the questions and steps that somebody could take if they're looking or seeking information like you, but they find a company that, let's be honest. I mean,
Google it.
Some of these companies, though, all they do is
it a monthly service or is it like a yearly
subscription? We quote probably different than most companies out there. A lot of companies, and again, I won't name names, but a lot of companies will put you in a program with the intent of keeping you in the program as long as possible.
Correct.
And they'll charge you a low monthly fee. Let's call it $99 or $79.
Yep.
And the way that they approach a credit file is they'll see all these different accounts that you might have on your credit report, but they take a shotgun approach to it. They're not doing it from the perspective of, hey, you're actually trying to do something with your scores. I just see you've got some stuff on your credit report. So we'll put you in a program and we'll challenge things kind of one month or one item at a time. We'll see how that goes. Then we'll do another item and they stretch it out sometimes 2 years, right? I think is the longest I've heard for something like that. We'll talk about debt consolidation in a sec too, because that's different. I think it's important to talk about. But so the way that we structure our program, when we analyze a file, we offer free consultations, firstly. And the reason why we do that is as much value as somebody's going to get out of that consultation, because we're talking specifically about their file, it's also for us to see if this person's a fit for our program, what can we do to help them. But our client that, that's the end user, the end client. The client of ours is also the loan officer or the realtor that's referred that person over to us, because we know that you're trying to fund a loan, you're trying to get them into a home, you want to have a successful outcome here. And so if I look at a file, and this is where our accountability comes into, and let's say there's, an account on the credit report that's stopping that client from being able to fund, and I see that and I say, hey, look, your odds of success here are going to be much better by you paying that account, getting a deletion agreement, having your loan officer do what's called a rapid rescore, which basically just speeds up the process of that updating on the credit report. That's going to be a much quicker result than us challenging that account. And your odds are 50-50 on it, just depending on what the account is. And you're going to pay us money to do that. Doesn't make sense, right? And so we offer those free initial upfront consultations because we need to see what's on the file. Now, if it's more in depth, there's a bunch of accounts, or it's not financially feasible for them to be able to apply those funds to whatever accounts they need to, then they'll go into a program and we'll do what we need to do on our side.
Yeah.
And so based on that, we quote a flat program cost and break it out over the program.
Flat fee. That's a good that's a question that people want to know. Like, hey, is this a flat fee or is this like a per cases type, or like per trade line type situation, right?
Flat fee program cost, but we break it out over the length of the program. We cap it at 6 months. We don't charge beyond 6 months.
Okay.